Good afternoon, everyone. Illinois Extension is happy to host another Connect Illinois BEAD grant webinar with Devin Bronstein this afternoon. I'm Nancy Ouedraogo, State Specialist in Community and Economic Development. Happy again to have this content on here and helping Illinois communities with their broadband development and funding opportunity. You will be able to get your questions answered at a Q&A after the presentation, and we thank you for returning for this week's education and ongoing outreach. And without further ado, I'll pass it to you, Devin.
Hi, everyone. Good afternoon. I will go ahead and share my slides. All right. So welcome back to our weekly BEAD Deep Dive webinar series. Today, we will be focusing on our templates that are part of the BEAD application. So this is part 1 of 2, and we will do the remaining templates and kind of details of the application next week as we get closer and closer to formally launching Wave 1. So as a reminder, the purpose of these webinars is to help prospective applicants learn more about the BEAD program, about Connect Illinois Round 4, and help folks prepare for that application launch. I'll go through the usual recap of progress to date first, and then we'll go through an overview of part of the list of templates that folks will need to fill out to apply for the BEAD program, and go through some demos of those as well. Okay. So first, as a recap, BEAD is a $42 billion federal grant program that aims to connect all Americans to high-speed, affordable broadband internet. So by the end of the BEAD program, all 50 states plus territories will have high-speed internet at every location. On the Illinois level, we were allocated $1.04 billion to connect all unserved and underserved locations to broadband over the next 5 years. The goal is to ensure universal coverage around the state. So where are we in our process? No major updates since we spoke last week, but to recap kind of the latest updates, all pre-qualification participation notice letters were sent to all entities who participated in pre-qualification. Our final BEAD eligibility data was approved by NTIA and published online in December. And we have also published our final project area units, which are the groupings of eligible locations and the building blocks of a project application. We also have our latest draft posted, as well as the application guidebook, all available to review and start preparing for your application. And as you can see, we're moving this diamond a little bit closer and closer to that Wave 1 launch, which will happen on January 23rd, just over a week away. So we will launch the first of 3 application waves on January 23rd. This first wave will be open for 5 weeks. And 2 criteria are involved in the folks who can apply who are eligible for this first wave. The first criteria is that we will be scoring and preliminarily awarding applications that use end-to-end fiber, so all fiber applications. And second, applications that are scored and preliminarily awarded in Wave 1 will be comprised of at least 10% or more of hard-to-serve project area units. Then in Wave 2, which will open roughly in late April, kind of depending on how long evaluation and scoring and preliminary award takes for Wave 1. Wave 2 kind of expands the pool of eligibility, so we won't be looking at hard-to-serve locations, and we will accept and score applications from all reliable broadband technologies. And then in Wave 3, we'll use that as an opportunity to look at remaining areas of the state, if there are any, work with providers one-on-one to make sure that every last project area unit is claimed by a project. And it'll be in this wave that we will consider accepting applications from alternative technology based on our remaining locations and budget. So 3 different opportunities to apply, and we are excited to kind of have this fluid approach that does give folks a few different opportunities to take a bite at BEAD. So I want to go into a little bit more detail first for folks who have submitted pre-qualification materials and did receive approval for some of those materials. So if this letter does not look familiar, this may not be relevant to you, but for the 41 entities who did participate in pre-qualification, you will have received a letter that looks something like this on the left-hand side, knowing that this is sample data, sample numbers. But I want to walk you through kind of what to do with this information once you start applying. So the first form that's a part of our application process is called an entity form. So everyone will fill this out once, and it basically just tells us that you are qualified to deploy and run a broadband network in a way that is compliant and meets NTIA and state requirements. So if you pre-qualified for materials, you don't need to resubmit materials that you have already been approved for unless there are changes or you want to resubmit them for whatever reason. So what you see on the right-hand side here is a snapshot of our entity form application. So you'll be able to say that you did pre-qualify. So you'll see here there's a question that says, did you participate in the pre-qualification process? If you did not, you'll say no. And if you did, you'll say yes. Then it will prompt you for your pre-qualification participant ID, which you'll see is on the bottom of your letter here on the left-hand side. This is the unique identifier that will tie your entity to your pre-qualification submission. So you'll put that here and you'll want to triple check to make sure that you are using the right ID. And then finally, you'll check off each qualification that you did receive approval for that you won't be resubmitting. And, we all don't have this memorized. So that is where your letter comes in handy. Again, you can see it here on the left-hand side. Here is our final determination for the qualifications that you've been approved for. So this is what you'll check off down here as a part of this pre-qualification approved qualifications. And anything that you check off, you won't need to resubmit, but make sure that you do submit anything that either wasn't approved or is new. So another recap here, the big news as of December is that we have all of our approved and eligible locations for the BEAD program, just over 175,000 locations that are eligible, including around 172,000 broadband serviceable locations, which we're required to cover, plus just over 3,300 community anchor institutions, which we will default to having folks cover. But if we do need to cull down project costs, these will be the first to kind of be shaved off to make sure that we are within our budget. And just to look at the bird's eye view of this map, all of the green locations already have service, and the pink and blue locations are those locations that are eligible. Excuse me. And maybe another quick recap. The last time we spoke, we did a demo of our project area unit map where you can view all of the eligible locations on a map in their assigned project area units. That is available for viewing, for download as a shapefile. So if you are a prospective applicant, we encourage you to make sure that your mapping folks are aware of that resource so you can start building your application on the back end and figuring out which locations are most interesting to you. And then next week, we will be launching the official sort of project area unit selection tool that you will use as a part of your application. So it'll look a little bit different, but you'll be able to select PAUs, save them in your shopping cart, download them, and then upload them as a part of your project form. And so with that, let me move on to the main part of our presentation today, where we will go over some templates that are part of the application. And I'm just going to take one sip of water. All right. So this slide might look familiar. We are required by NTIA to confirm that applicants meet a series of qualifications, both as an entity and as a project. And a subset of these, we are standardizing the information that we collect through templates. So templates are essentially documents that we have created with instructions that applicants can fill in with their project or entity specific information. And the reason for these is that then when the information comes in, everything is standardized, and that makes for kind of an efficient review process. So the first time you fill it out, it may be new to you, especially if you did not participate in pre-qualifications. So we'll walk through some of those templates today and the rest next week. And of course, we're always available through office hours or one-off meeting to kind of support you in filling those out on your own. So on this slide, you'll see that we have a series of templates, forms, and example documents. As I mentioned, templates require applicants to input specific information in a format that we'll provide. Forms are like any form, you'll have to check off various things, and most of the forms are sort of state of Illinois requirements like filling out a conflict of interest form, a W-9, things like that. And then we have two example documents. One is a logical network diagram where we say, here's an example of something that we might expect to receive. So we're aligned on expectations. And then the second is the model letter of credit, which we'll actually talk about today. So the lines highlighted in orange are those that we will go through today. So I'm going to give a quick overview of each slide, and then I will flip to Excel to show you what the templates actually look like. And I have a couple colleagues on today, John and Sandeep, who I will call upon to add some color to these based on their expertise as well. So first is the ownership information template. This is in the entity section, meaning that we're looking for ownership information about your entity. So the company or the organization that is applying will ask for various pieces of information about kind of your ownership structure, different stake in the organization, et cetera. John, if you want to weigh in here, or we can wait until we flip to the actual template on any additions.
Yeah, thanks, Devin. I can just set the stage a little bit. So, question number one: why is this set of ownership disclosures part of the BEAD process in Illinois? So, the primary answer is because it's required under the federal rules, right? So this ownership disclosure is straight out of the NTIA overall BEAD rules that apply to all states. So this is not a case where Illinois is adding to the program. This is a baseline part of the BEAD program from the federal NTIA requirements. Just to say one more bit about it, and then we can turn to the template. Why is that required, or what are we really doing here on the merits? Why is NTIA require it? These requirements and this specific template is drawn directly out of FCC programs. In fact, the lawyers on the call will know that reference to 47 CFR you're seeing. Those are the FCC rules and regulations. Really, what these ownership disclosure forms are doing is any applicant for BEAD. I mean, just to sort of say in a basic way, the government needs to know who the real parties and interests are. And obviously in this industry, there's plenty of examples of the actual end applicant that may be getting the grant money and building broadband may be owned through various structures. You may have an investor who has separate funds, and one of those funds owns a holding company, and that holding company then owns the provider and various versions of that. Essentially, the government has learned through many programs that it's really important to know who the real parties and interests are. And so what you're going to see through the template Devin will go over in a second is basically a series of tabs by which you have to disclose 10% owner interests. individuals or other companies. And it's basically the government saying, we just really want to know who we're really dealing with behind whatever set of holding companies or other ownership vehicles that you have. And that's really for two primary reasons. So reason number one is just the very basic reason of, literally who are we dealing with? But then that does relate to some other aspects of the BEAD program. So for example, there's some things that we've talked about in the past that are relevant here around financial capacity. So the government does need to know, you might have an end user applicant that's owned by a holding company that's owned by an investor. At some level, someone has to have the financial capacity. It's fine to be attributing that in your ownership, but we also need to know what that ownership structure is to evaluate it. That'd be one example. There are disclosures about citizenship and non-citizenship. There's some relevant issues around national security sometimes, around federal grants and these networks, and if there are non-US citizens involved. And then the third reason this is always required is the requirement that the BEAD program be run in a fair, open way, protections against collusion between applicants. Illinois has provided some rules for that in the NOFO that you should take a look at. These ownership disclosures actually give the state the information it needs to make sure those rules are being filed, so that the state knows who actually is the real party behind a given applicant, especially if it has some separate entity name that's being used for the primary application itself. So long way of saying federal rules require this. Illinois is doing what's required. It shouldn't be that hard to walk through it. In some cases, it may require a fair bit of reporting if you have a complicated structure, but that's why we're asking for it.
Great, thanks, Sean. And I will just maybe flip back and forth while we're on each topic. So I'm going to flip now to the ownership information template in Excel. All right, so hopefully folks can see that. One thing you'll notice is that on each Excel template, the first two tabs will always be the same. So the first tab will say Connect Illinois Round 4, and we'll have a series of instructions. So you can see the instructions here. We're asking for applicant information, and then you have the option to fill out tabs 1 through 7 based on what applies to your organization. And then applicant information here, we ask that you fill this out on every template so we can make sure that if it gets lost, it's being linked back to the right application. So this is the information, some sample information here so you can see what we're looking for, but really this is an easy copy and paste so you have the same information on every template. And then John, I don't know if we want to walk through each of these, but these are the different places where you can input information like parties of interest, parties with stake in the organization. So happy to just kind of toggle through these. And John, if there's anything you want to shout out, feel free.
I mean, in one sense, this should be straightforward based on what your organization is. I think second, obviously some of this has been part of pre-qual that some entities have gone through already. I mean, if any given case, there's a very particular question about exactly how this applies to you, I think we would have sort of an ability to, go do a little clarification on a given example. But in general, the instructions are pretty clear. It's about owners, up to 10%. It's about board members. It's about providing their names. Because again, it's about getting to the root of who the actual counterparties are.
All right. Moving right along here, I'll flip back to the slides. So next we have the existing broadband projects template. This is part of a requirement to report other publicly funded broadband projects in Illinois. And we also ask specifically for progress on RDOF or CAF2 projects if your entity has been awarded funding for those grant programs in particular. The goal behind this is to understand the other work that you're doing in Illinois. We want to make sure that you're on top of those milestones. You have a good track record of completing projects here in Illinois. And if there are any potential areas of concern, there's an opportunity to flag that. I would say more transparency is always better because, if there's something that we can do to support or help you work through it, this is kind of an opportunity to do that. John, anything you would add before I flip to the template, or maybe you can share anything as we go?
Yeah, no, I mean, like this should be, if this applies to you, you should know. If you have a federal grant in Illinois, you should be disclosing it there. And if it applies to you, the categories I think are pretty self-explanatory. And again, these are federal requirements, and it all relates to just reporting. And the federal government wants to know where all the different dollars are going across programs.
Great. And here it is. So this will look familiar. The first tab is always the instructions tab. So you can see here the explanation of what we're looking for. And then we have essentially following the standard applicant information tab where you'll fill in this. We have two tabs, one for RDOF and CAF2 and one for other broadband projects. So we kind of filled in this with some dummy data. I know there was a recent RDOF milestone in December. So a flag that if you did participate in pre-qualification and have submitted information on an RDOF award because of that milestone that has since passed, we'll ask that you fill it in again or resubmit that with any updates so we can get an understanding of your status there. And then other broadband projects. If you're a Connect Illinois rounds 1 through 3 awardee, this is a great place to indicate that information, and we'll kind of validate it against what we have. You might also include a Reconnect grant here or any other federally funded projects that are happening here in Illinois. All right, flipping back. So next is the project timeline template. This is essentially a project plan. I believe in past rounds of Connect Illinois, we kind of allowed folks to submit whatever format of project plan that they, were accustomed to. For BEAD, given the volume of applications and complexity, we thought it would make sense to just streamline this and create one main template that folks can use. And the goal of the project timeline is to show, the kind of high level details of the build out timeline and milestones for the proposed project. And this will come in handy in a couple of places. One, we'll have merit reviewers evaluating whether it feels feasible to accomplish what you're proposing within these sort of timelines and milestones. And then more importantly, one of our scoring criteria will award points if projects commit to being fully deployed and completed within 2 years rather than the fully allotted 4 years. So if your project is going to be done in 2 years and you're looking to access those extra points, that's great. We just want to make sure that your proposed timeline is also reflected on your project timeline template. So you should confirm that all of your documents kind of line up as such. So to give you a preview of that, I'll now flip over to the timeline. So again, same two first tabs here. We have instructions and applicant information. The only tabs that you're inputting information on are the applicant information, which again, you can kind of copy and paste from each template, keep a copy separately that you can paste from. And then this timeline slide. I'll share briefly the glossary here, which is not something that you're expected to edit, but rather defines each of the program milestones. So we're kind of speaking the same language here. These milestone categories were based on the tentative fixed amount subaward payment milestones. So ideally, we should be able to reference your project plan or your project timeline with how you are requesting reimbursement down the line. We know this can change slightly, but should generally align here. So the tab that you'll be completing here is the timeline slide. So the milestones on column B will be in the document already. And then what we'll ask of you is for each milestone in column B that I'm highlighting right now, you'll then fill in a description of your plans in column C, and then you'll fill in these two fields here. So for detailed project planning, for example, you might say, I will develop a detailed project plan. I'll procure a design engineering contractor. I'll train internal staff on grant reporting and compliance, whatever is a part of that kind of first initial project planning phase. Then you'll indicate milestone start. So you'll see that each month here has a unique number starting from 1 through all the way to the end of that 4-year process. So month 1 represents your grants agreement has been signed and executed, and you are ready to go, you're starting. So whatever that first month is month 1. So in this case, for detailed project planning, let's say hypothetically that you are ready to go right when you sign that grant agreement, then you would say that this milestone starts in month 1. So I'm going to put a 1 here. And then the milestone duration is the count of months it'll take to complete. So let's say that detailed project planning you estimate will take roughly 3 months. Then you put a 3 in this E9 cell. And you'll see on the right-hand side here, it fills in shaded areas. Oops, sorry, trying to zoom in here a little for you. It fills in shaded areas to show you visually where that falls in the timeline. Let's scroll down a little bit and let's say, permitting is kind of going to be an ongoing process, starting a little bit later in that first year. So we may want to start permitting at month 7. So we'll put a 7 here, and you'll see that it kind of initiates it right here in month 7. And let's say this is going to be really a year of ongoing permit requests responding to needs. We're going to say 12 here to represent 12 months from that 7th month. And now you'll see everything here was filled in 7 through 12 months. And if things are happening later on in year 3 of the project, you may say that something starts at month 27 or month 35. So really just a way to kind of show progress along the way. And if something will only take 1 month, then you can indicate the starting month and then indicate just 1. And again, if you're looking for clarification on what each of these means, that glossary tab will come in handy. All right. So next we have the project cost and investment schedule template, also known as a budget document. This document captures your expected budget for the project, including both the subsidy that you're requesting from the state, in addition to the match that you're putting in. We'll ask for some details, justifications, and then we have a summary tab that breaks this down at the category level so you can get sort of an overview of everything that you put in the document. This will look a little bit different than previous Connect Illinois budget documents because we wanted to make sure that it was organized based on the categories that are most pertinent for the BEAD program. So I will now share the project cost template. So here we've got lots of instructions, and each tab that says input means that there's something for you as the applicant to input into the tab. If it doesn't say input, it's kind of summary information that's just helpful kind of an FYI, auto summarized information, but not an ask from you. So first, we'll have our standard applicant information, which you'll fill in here. And then the main tab here is the project cost details. So you'll select a category for each project cost category, fill in the specific item, fill in the unit, the quantity, and the cost. And then you'll see on the right-hand side here, it'll auto sum the cost of that line item. You'll indicate the grant funds requested. And if the grant funds requested is a smaller number than the total cost, it'll automatically fill in the difference between those two numbers into the match because it assumes that anything you're not requesting, you are putting in. And then the final column here asks for cost details and justification. So sort of why are you asking for this and any justification behind that cost based on industry norms and any other information that you'd like to provide. So for example, just to kind of back this one out, there's a drop down here under the category. So select from drop down. You might click on network equipment. Under cost item, you'll describe it. If it's a pre-award cost or a closeout expense, these are allowed in the BEAD program. So you would select this if the item fell into one of these two categories. If not, you can just leave it blank. Then you'll say the unit. So if it was hours, feet, or just in general, you could just say each. The quantity, let's say 3, and then the cost of the unit, $500 each. So then it automatically tabulates 3 times 500 is 1,500. And then the grant funds requested, let's say that we are going to ask for $1,000 for this line item, and we're going to put in around a third of that as a match. So then you'll do that for each category here. And to keep track, we have a handy project cost summary over here on this tab that automatically tabulates all of the funds requested, the match amount, the total, and then the percent match. So you can have a sort of easy reference point versus trying to do the math on the side. There's some more definitions over here and funding information, again, to make sure we're kind of all speaking the same language and referring to things using the same language. And then finally, our third input tab here is the capital investment schedule. We'll just ask for the pace at which you're spending down these costs, broken down by category and year. So our main ask here is just to make sure that the total here adds up to your main budget total. And we have Sandeep on the line, who is one of our merit reviewers, specifically in the finance department. So Sandeep would invite you to add any other tips and tricks for the budget document or building a budget that you might want to add.
Or great to see everyone and widely attended webinar today. Yeah, so I serve as a program advisor with the Illinois Office of Broadband, been with the program since 2020 and see many familiar faces or at least names on this Zoom call, folks that have applied for grants in the past. And you may remember or we may have had some conversations about your budget template. So great to, again, talk about that. So what are we trying to achieve with the budget template? I think of 3 major goals. One is we want to make sure that these budget templates are comprehensive and detailed. Secondly, that all the costs are allowable. And 3, that all the costs are reasonable. So let me take them one at a time. Comprehensive and detailed. One, the purpose there is to make sure, first of all, that our applicants that are asking for millions of dollars have the financial maturity, I would say, to strongly plan, develop, and maintain a broadband network, and especially one that's funded by public dollars. And with that, we want to make sure that these budgets are in no way understated. Granted, you have a contingency line item but the last thing we want to see is a project that runs out of funds before the network is built. So we're almost trying to protect yourselves in some way. Secondly, as Devin talked about, we want to make sure all of these costs are allowable. And so this template makes it very user-friendly to make sure that every line item fits into a category. And so it's almost dummy-proof as far as putting in a cost that's not eligible, but surely you can put something in one of the categories and then wind up putting a cost item that's not eligible. And we want to protect yourselves against any sort of non-compliance with that. So we'll look at that. And I think third, I would say probably most importantly, we want to make sure that the budgets are relatively cost efficient. Our goal in Illinois and any state that's taking money from BEAD is to drive universal availability. We have a federal requirement to bring broadband to all unserved and underserved locations across the state. And so we have 175,000 such locations in Illinois and want to make sure that these budgets are cost efficient. And it's in your own interest to have a very cost-efficient budget. And when I say cost-efficient, I really mean that all the quantities and the unit cost are reasonable. But if you look at our scoring framework, 50% or 50 of the 100 points are about financial efficiency. 30 of those have to do with your minimum BEAD outlay, and 20% have to do with your non-state match. But having a very cost-efficient budget is very important. One way to think about that is a lot of companies, and we'll talk about this in a few minutes on the pro forma, but you may have an idea for what your maximum match might be on a per unit basis. And everything beyond that is grant. So to the extent that you can lower the grant amount, that helps you in two ways, right? With those 50 points. If you lower the grant amount, it helps you get more points with your minimum BEAD outlay. And secondly, as you lower the grant amount, well, what happens? The match percentage increases. So to the extent that you have a very reasonable, i.e. cost-efficient budget, it's only going to improve your ability to compete in PAUs where there's going to be overlapping applications. And so also on cost efficiency, the review team will look at each of these items. And we have the good news with Illinois is we've been doing this for about 5 years. And so we have a lot of benchmark data on cost per mile, cost per unit passed, the percentage of a budget, that's the percentage of any given category and how much that is of the total budget. So if engineering and design winds up being 20% of your total budget, there's a problem with that. Generally, those things are anywhere from 5 to 8%. So we have some benchmark data. If we see something that's out of the ordinary, we certainly may ask about that in the curing process. And then we have, again, the luxury of having reviewed hundreds of proposals in Illinois. We have some general idea for what those unit costs are. So again, if something just stands out way beyond the benchmark, we'll certainly ask about that. This is a score. The applications are scored, but we may certainly come back to an applicant that has a strong score and say, look, the grant request is significantly higher than what we have as our reserve price, or maybe your total cost is beyond the eligible high cost per location threshold. So we certainly may ask at some point that, hey, are there opportunities to reduce the budget and make it more efficient? But in the end, if the best practice would be have a budget that's very comprehensive and detailed, aim for more detail, be very reasonable in terms of your cost structure, both in terms of units and unit pricing, and then, of course, only include eligible cost, which, again, this template makes it so much user-friendly to do so. Those are, I would say, the 3 best practices.
Great. Thanks, Sandeep. And with that, I think we can flip directly to the pro forma template. So Sandeep, if you want to screen share, but I am also happy to share
Sure.
that if you want.
Do that. Okay. Can you see the spreadsheet?
Yep, looks good.
Okay, great. So the pro forma template is, let me just preface it by saying, for those of you who don't have a background in accounting in finance, this may seem very complicated, but it's really not. And for those of you, whether it's your internal accountant or your internal finance person, or if you're using a consulting firm to prepare something like this, it's very reasonable in terms of its complexity. So it's not a very complex set of pro formas, but it does cover all of the grounds that we need to sort of evaluate. So what is the purpose of the pro forma statements? There are three. One is to evaluate project financial sustainability, and I'll talk about all of these one at a time. Secondly, is to ensure that the grant that you're requesting is reasonable, or the match that you're investing is reasonable. And three is to, if you are asking for a match waiver, that these pro formas can help justify why you have such a waiver, because we have to explain to NTIA that we offered a match waiver and they're going to want some empirical evidence, and these pro formas would be one type of evidence. So let's talk about financial sustainability. And I'll talk about all of these tabs in just a second, but I want to preface it by some key principles. So from project, financial sustainability, as John alluded to with another component, NTIA provided many guidelines to states. And one guideline was, it's spelled out in the NOFO, that the eligible entity, in this case Illinois, shall require prospective subgrantees to submit business plans and related analysis that substantiate the sustainability of the project. So from our perspective, these pro formas can basically tell us very, in simple fashion, is this project financially sustainable? And so what we're looking for there is that after all of the investments are put up, these are upfront investments. After that, during the operating period, will the project experience positive cash flows? And again, most projects should achieve that, because if you're getting CapEx funding for, both in terms of your grant and your match, at that point, it's really about your revenues versus your OpEx. And unless you're in a very low density market where the subscribers aren't putting in enough revenue to justify your OpEx, you're going to be financially sustainable, but we have to double check that. And everyone talks about cash is king. Well, the cash flow statement tells us right away, is your project basically financially positive in terms of cash flows? And if it's not, for reasons of low density or any other reason, then we'll certainly want to see a narrative that talks about investing more capital downstream. But I imagine most of these projects will be sustainable just from the way broadband economics works. So then secondly, and this is really big, the reasonableness of your grant versus your match. So if you think back about the reserve price, when CostQuest came up with the reserve price, they basically looked at, what is the NPV for any given location in Illinois? And they came up with that analysis, the ROI, the return on investment, or the flip side is the net present value, based on looking at the cost of capital for an average company. And so similarly here, when we look at your pro formas, and I'll talk about this in a second, it does tell us, after you put all these inputs, what is your internal rate of return or your net present value? And if the rate of return is really high, or the NPV is really high, that means you're basically earning a return that's greater than your cost of capital. And if that's the case, we certainly want to have a conversation with the applicant, because we're trying to, again, as Devin has talked about in many of these webinars, our major principle here is stretching these grant dollars. They are limited to basically achieving universal broadband for every location across Illinois. And so if your returns are high, we certainly want to have a conversation about that. The flip side is that some companies may try to game it by basically having a cost structure that's higher than what it should be, or having a revenue plan, whether it's the penetration rate or the average revenue per user, that's lower than it should be. In that case, you're then going to try to ask for more grant dollars. Well, there's two negative things about that. One is, as I already mentioned, it is a competitive process. And so if you're asking for more than you should, that will be reflected in your minimum BEAD outlay as well as your low match. And so I wouldn't do that. And secondly, if in those cases where there happens to be a single application in a given region, we hope that's not going to be the case, but if there happens to be, we'll certainly want to look at these pro formas to make sure that that only bidder is basically asking for a reasonable match. And so in the past Illinois grant programs, where we tried to, and in many cases, we did receive multiple applications in given areas, it didn't always work out. So we spent a lot of scrutiny on the pro formas. I think with this program, given the size and scale, but the fact that we expect robust participation, these pro formas will, again, be a key tool in us looking at the justification for your match. And so that's point number two. And then, as I mentioned earlier, in some cases we may see match waivers. In the first round, especially, we have something called hard to serve areas, and those are areas where you may say, "Hey, I cannot put in the 25% match just because it's either an area of persistent poverty or it's a very high cost area." And in such cases, again, NTIA is going to say, why are you allowing something below 25%? And if the pro forma is based on reasonable assumptions, justifies a lower match percentage, we can certainly have that conversation. In terms of negotiation, I would simply say that we may come back to an applicant after we look at these pro formas and say, there are certain elements that just don't seem reasonable, and have a conversation and come back to, is your revenue plan lower than it should be, or is your OpEx, your operating expenditures higher than it should be? And if that's the case, we may have a conversation about finding ways to get some more cost efficiency. For example, if there's some PAUs where we don't have any bids and we see a set of pro formas that seem a little bit on the inefficient side, we may be able to negotiate and say, hey, if you can expand into some of these other areas, maybe these pro formas can work for both of us. So that's where we are. And again, 50% of the 100 points are about your minimum BEAD outlay and your match percentage. And so we believe the scoring framework will drive many companies, or most companies, most applicants, to establishing pro formas that are very cost efficient. But if not, we certainly have the spreadsheets to go through. So let me now turn to the actual pro formas here. So the first page is basically instructions, and really about the scope of the pro formas. And so from a scope perspective, I want to say a few things. One is that it has, the scope is basically Finance 101, income statement, balance sheet, and cash flow statement. These are all intertwined. You can't, income statement reflects basically revenues and cost, which is then needed to understand your cash flows. And of course, your assets that go on your balance sheet depreciate, which then impacts your income statement for tax purposes, as well as the CapEx, of course, that goes on your balance sheet impacts directly what your investment is, which ultimately is the return on investment that we analyze in the cash flow statement. So all three, income statement, balance sheet, cash flows, they are basically tied together, all members of the same family, and they're all needed for us to move forward. So that's one point. As far as another key point, these pro formas are only about the project that you're submitting the grant application for. It is not the pro formas of the company. I want to stress that. It is not the pro formas of other grant applications that you might be submitting to a different state, or other grant applications that you're submitting to Illinois. It is about the specific application that you're submitting to Illinois. I just want to make that very clear. Third is, from a scope perspective, we are looking at this over 14 years. So why 14 years? The key there is that NTIA basically allows for the CapEx expenditures to take place over 4 years. And then 10 years, and so 4 years is the front of the project. And then generally in any business plan, you want to look at what the cash run rate looks like over 10 years in terms of both cash inflow and cash outflow. So that's where you have 14 years. If you can build this project within 2 years, then we would obviously look at 12 years of cash flows. If you can build it over 1 year, then 13 years. Definitely you can't go past 4 years. And so that's where the 14-year number comes from. Finally, the pro formas, there's two ways to think about grant projects. One is to just look at this on a net match investment basis. And that's what we're doing here. We are only looking at the pro formas associated with, and this is all spelled out in the instruction format or instruction guide here. We're looking at what is your net, your investment, which is your match contribution. We've seen in the grant world for broadband, a lot of companies, technically what companies normally do from an accounting policy perspective is that they put in their grant dollars as well as their match dollars. And the grant dollars basically serves as deferred revenue. And then as you depreciate that grant investment, that deferred revenue becomes real revenue, which is then offset against depreciation expense. So it's a wash on the income statement, and that same wash happens on the cash flow statement. Depreciation expense is not included, is lowered in the cash flow statement. And as deferred revenue goes down, that increases the cash flows. And so that's basically a wash. That's the technical right way to do it from an accounting perspective, but you wind up, the math works out, whether you look at it from a net match perspective or that deferred revenue perspective, the answer, the math is going to be the same. And so if you're working with a consulting firm that has traditionally submitted pro formas using that full grant investment, that's fine. You can do that. We would just ask you to prepare your own pro formas, not using this template, but you should include all of the features that are in this template. But we've made this more simple for companies to say, what is your net match or your net investment, which is your match? And we'll look at the ROI at the NPV based on that. So, and then secondly, as I mentioned, if you already have your own templates to fill out, you may do that, but just make sure it has all the components that we talked about in this document. With that said, let me just walk you through, as Devin has for the other statements, what the other templates, what the different components are. So the first component, you put basically the applicant information. So pretty simple. On the assumptions spreadsheet, there are many components that you have to fill out, and I'll walk you through those in just a second. And then you have the income statement, balance sheet, and cash flow statement. We've made this really, really simple. So you only have to input a handful of numbers, and then from the financial factory, out comes your rate of return. And so let me just walk you through what this would look like, what you have to fill out. And this guide tells exactly what you fill out here in the assumptions guide or the assumptions worksheet versus what you have to fill out in the actual the other statements. And there's not a whole lot to fill out beyond the assumptions. So let's say the first question is the capital deployment period. So it's a fiber project, and I need 2 years to deploy that because I'm trying to achieve my extra points for that project timeline. So there you put that, 2 years. The project CapEx. So let's talk about a $10 million fiber project. And so I will put in $10 million here. So let's just say $5 million in fiber, equipment, $3 million. And oops, take a zero off there. And then just another component of the network. Let's just make up something here, just conduit. These are all just numbers I'm making up on the fly here. So that's $10 million. I want to get at least 25% in, but let's just say I do 30% match. So I will put in, oops, my grant amount is, oh wait, sorry, the grant amount is here, 3 million. That's a number I'm going to put in here. Sorry, 7 million for grant. So the grant percentage and match percentage are automatically calculated. That's why it wasn't allowing me to put in the percentage. Okay, but the matches comes out because, $10 million of CapEx minus $7 million in grant gives me a $3 million match. Okay. Now depreciation. Depreciation obviously impacts your tax rate. So we have to account for depreciation in a bit of a sophisticated way. And so it took me 2 years to build this, and I'm going to start depreciation in year 3, and I'm going to depreciate this over 8 years. Okay. And so the beautiful pro forma template that's a little bit sophisticated automatically calculates out that depreciation expense. Next is your OpEx, your OpEx, your recurring expenses. So it's got some categories named here, and you can certainly add more categories. And so let's assume each of these is just for purposes of simplicity, 10%, 10%, 10%, and 5%, and 5%. Okay, adds up to 40%. So that basically it says that my OpEx is 40% of my revenues. That's on average. Obviously, we know in the early years when revenue is limited, you may not have that OpEx may be a much higher percentage of that limited revenue. And over time, that will come down as revenues grow. On average, we're saying 40%. Again, we're not trying to be we're not Wall Street investing in this project, so we're not looking at exactly what is the exact OpEx percentage year by year. We're really looking at this based on the law of averages to get us a reasonable sense of both financial sustainability and reasonableness of match. You put in your tax rate, so let's say 25%. And the grant distribution period is 2 years, which comes up from what I said earlier about the CapEx deployment happening over 2 years. And discount rate, professional growth rate, and TV. Let me talk about that. So the discount rate is basically your weighted average cost of capital. Many of you borrow debt and have your cost of equity. And if you take a weighted average of the two, you may be at 8%, 9%, 12%, hopefully not too higher than 12%. So 12% is basically in the model right now. You can certainly lower that or increase that, but if you do, in any case, we want in the note section, and for all of these, provide some detailed notes behind all of these assumptions. Many of these assumptions will tie to your budget, for example, on the project CapEx breakdown. But for some of these others, provide some narrative to the reviewers to help us understand why you came up with the assumptions you did. So that's key. If your discount rate is lower, please add that and just spell, hey, my weighted average cost of capital is lower. If it's higher, please let us know. The terminal value is basically what is the project at the end of at the 14th year? What is like if you had to sell the project, how much would you get? And so that's a simple formula that's based on the discount rate and the perpetual growth rate. So it's 1 plus the growth rate divided by the WACC minus the growth rate, and that gives you the TV. And so we have 10.2 in here. You can certainly change the discount rate and the growth rate to come up with a different terminal value, but that's basically a calculated number. Okay, so I've put all my assumptions in as far as I can tell. Now I go to my income statement. And so I'm saying this is a 2-year project. And so let's just say of the $10 million, I'm basically 1,000 units. So about $10,000 per passing. Simple math. So I'm passing 1,000. And so that will go all throughout that first, sorry.
And Sandeep, just a quick time check. We have about 1 minute left, so maybe we can wrap up here, and then if there's interest in kind of doing a separate deeper dive session or coaching session, we can get that scheduled.
No worries. Take rate, since I'm operating this in starting in year 2, let's just say I'm going to get 70%, and then that'll be basically consistent throughout that time period. And my ARPU, my average revenue per user is, let's say, $90. And that's basically for the whole period. Oops. And so all of a sudden you have your revenue forecast, you have your net income forecast, you go to your balance sheet, that's all filled out. Again, if you have some specific notes payable, you may have to fill that out manually, but otherwise, your balance sheet is basically filled out, and your cash flow statement is there, and I got a return of investment of 13.3%. So, and if you know the math, because you're earning more than your discount rate, obviously, you have an NPV greater than 0. If your discount rate happened to match your IRR, your NPV would be 0, and that's what we're really looking for. So, with just a few assumptions, you have a financial model. And certainly for those companies that have not developed, a pro forma, this is a great way to do that, just to understand your ROI and to explain to a lender what your ROI is. This number is going to generally approximate what a lender may look at or an equity investor. And so it's good to go. And so again, we want to look at this for both financial sustainability purposes and just to really look at what your ROI is. And if we feel like the project is achieving a much higher rate of return, we certainly may have that conversation, but it's in your own interest to develop a pro forma that's cost efficient and reasonable in terms of both cost and revenue. And that'll help your scores with the minimum beat outlay and your match score. So with that said, back to you, Devin.
Great. Thank you so much, Sandeep. And I would say if your finance folks do not attend these webinars, this is going to be recorded. And so feel free to pass it along, and happy to do a separate sort of deep dive training, anything that folks need. Clearly a lot here, but hopefully the template makes it a little bit easier. And as I shared in the chat, the pro forma template is optional. So as long as you provide us this information in some way, we will take it. I know we are a little over time here, so let me just check the chat. I got a question about submitting in wave one if you are not an end-to-end fiber project. So you're welcome to submit. We cannot score and preliminarily award your project, but it is good data for us to have kind of from a cost and technical standpoint and an interest standpoint. And then essentially we would move your application over to wave two and evaluate it then, or you have the option to just wait until wave two if you are not submitting a fiber project. We got a question about the column number on the ownership template. This is just sort of ordering the number of rows that you have. So feel free to fill in 1, 2, 3, 4, 5 sequentially for any rows that you have. No real significance there. All the templates linked to in the application guidebook should be final. If we catch any sort of error or if you see something that looks funky, let us know, and we'll get that updated. But as of now, they should be final, so you can start building those out. Is there a place where we can see the awardees and grant amounts when they are awarded? Yes, we will be publishing our final proposal and the list of awardees once they are finalized. We cannot do that until we run all 3 waves, so it will likely not be until next fall earliest. In between each wave, we will publish the updated map, so you'll be able to see which project area units have been claimed and which are still on the table. Can you show the last PowerPoint slide about pro formas? I can indeed. And again, we'll share out these slides. So this is the pro forma, again, looks at financial sustainability. Use of a template is optional, but we created it for your convenience. We collected pro formas in Connect Illinois round 3 and got a whole bunch of types of information. So thought for streamlining purposes, having a template would be useful. And then while I'm here, maybe a quick teaser to one thing that we did not get through. We do have a model letter of credit available online. So we will not ask for a letter of credit as part of the application, only a commitment letter. But the letter of credit indicates kind of what you can expect to be asked for, that we will ask you for if you are awarded before we sign that grant agreement. So we'll talk about this in more detail in next week's meeting, along with some of our project-specific documents, and most importantly, that PAU selection tool, which will be live by the time we are together for our webinar next week. See if we have any other questions here, and then we can wrap up. Is the location list version 3, or is there an updated list? So I would encourage you to visit our subgrantee selection website, which is linked here on the slides. Not sure I can, I can copy and paste it from my web browser. But on that website, we have all of our final locations that you can either view on a map or download. And I will put that link in the chat. Okay. Great. Well, thanks all. I know a lot of information today, hopefully useful. And as always, please don't hesitate to reach out to broadband@illinois.gov with any questions. Huge thanks to Sandeep for joining us, one of our program advisors, as well as John Wilkins. And we will see you over email or next week. Thanks, everyone.
Thank you, Devin, Sandeep, and John. Really appreciate all who came today, and we'll see you next week. Thank you so much.
Thanks, Nancy.